Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you could head to incomeinvestors.com, or you can find the link to the website in the description below. Real estate investment trusts, or REITs for short, continue to be one of the hardest hit sectors in high interest rate environment. That's because higher interest rates drive up the cost of borrowing and cut into margins, which leads to reduced profits and free cash flow. Interest rate cuts are imminent, though the exact timing of the Fed's first announcement is open for debate. Initially, it was thought that the first cuts would come in June or July, but there is a growing consensus that the Fed will start lowering interest rates in September. A large number of REITs have made move to the upside in anticipation of the mid-year rate cuts, but these moves may be a little premature. Then there are companies like NexPoint Real Estate Finance Inc., traded on New York Stock Exchange under symbol NREF, REITs that have not jumped on bandwagon just yet, and that's actually a good thing. John?
Yeah, thanks, Mo. NexPoint Real Estate Finance is a mortgage REIT or mREIT that is primarily focused on investments in multifamily, single-family, rental, self-storage, and hospitality sectors. They're located primarily in the top 50 metropolitan statistical areas of the U.S. The company focuses on lending or investing in properties that are stabilized or require limited deferred funding to support leasing or the ramping up of operations, for which most capital expenditures are for value-added improvements. Now, the portfolio has minimal exposure to construction loans, no heavy transitional loans, and no for-sale loans. The company's outstanding total portfolio is comprised of 90 investments worth $1.2 billion, and it's geographically diverse, biased towards the southeast and southwest. Now, of that portfolio, multifamily accounts for the largest slice of its debt portfolio at 64.6%, and that's followed by single-family rental, life sciences, and self-storage.
And this REIT reported solid first quarter results.
Yeah, typically a higher interest rate environment is great for lenders. After all, the majority of their investments are floating rate. The biggest concern, of course, is the possibility of commercial mortgage defaults. Fortunately, the impact of defaults has been widely overstated. That doesn't mean mREITs aren't facing headwinds. Interest rates can only go so high before it begins to negatively impact their customers' businesses. So for NexPoint, as of May 1st, 2024, there are no loans currently in forbearance actually in its portfolio. NexPoint reported first quarter net loss of $14.6 million, or a loss of 83 cents per share. On the plus side, it reported cash available for distribution increase to $14.9 million, or 60 cents per share. Now, looking ahead to the second quarter, NexPoint expects to report earnings per share in the midpoint of around 39 cents per share and cash available distribution of 40 cents per share.
Despite industry headwinds, it has maintained its quarterly dividend of 50 cents.
Yeah, in the first quarter, NexPoint announced a cash available for distribution of 60 cents per share. It's more than enough to cover its second quarter dividend of 50 cents per share, which works out to a current yield of 14.96%. Now, when the company has a really good quarter, it can also distribute special dividends. Back in October of 2023, it declared a regular dividend of 50 cents per share and a special dividend of 18.5 cents per share. Now, it also declared special dividend of 18.5 cents per share in both July and October 2023 as well.
Looking at the NREF shares, they are down about 13% in 2024, but have big upside potential.
Yeah, NREF shares haven't been entirely consistent of late, up 15% on an annual basis, but down 13% since the start of 2024. Now, like many REITs, NexPoint stock got a boost in early November when the Federal Reserve announced it was holding its key lending rate at 5%. Now, from the beginning of November through late December, investor optimism actually sent NREF shares, I think, 17% higher. It's been a slightly different story in 2024, with mREITs under pressure with uncertainty around when exactly the Fed is going to announce its first rate cut. Though for technical traders, NREF stock is actually trading near support level it held back in late October, which is just before the Fed said it was keeping its overnight lending rate unchanged. And it's basically been trading near that support level since the beginning of April. Now, while NREF stock has essentially erased all gains since November 1st, 2023, the outlook for NREF stock remains pretty solid. Wall Street analysts have provided a 12-month average share price forecast of $15 per share and a high estimate of $19 per share.
John, thank you so much for your insights. NexPoint Real Estate Finance Inc. is a commercial real estate finance REIT with geographically diverse portfolio that is made up of primarily of single-family rental and multifamily rentals. Despite challenging conditions in the commercial real estate market, NexPoint was able to generate cash available for distribution of 60 cents per share, more than enough to cover its quarterly distributions. Looking ahead, the portfolio's average remaining term is 5.3 years and is 86.6% stabilized, has a weighted average loan to value of 68.5% and an average debt service coverage ratio of 1.74 times. Thanks to the weighted average remaining term, NexPoint's portfolio will enjoy a stable and transparent earnings stream for the next 5-year plus. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.